Hello everybody, this is Toni Turner and welcome to the Market Now. I'm recording this on July 3rd, Friday, and as you know, of course, the stock market is closed today, so all of our charts naturally we'll be talking about will be the close yesterday, Thursday, July 2nd. Please know before we get started that all of us at ToniTurner.com wish all of you a very safe and happy Independence Day, a wonderful July 4th. And now let's go on to three charts that could give us some insight into the week to come. As we always do, we're going to start with a daily chart of the S&P 500 spiders. SPY is the symbol, and of course this is the ETF that closely follows our benchmark S&P 500 index. Now today, or Thursday, yesterday I should say, the SPY closed at $312.23, or about $31.22 on the S&P 500 itself. Now, as we can see here at this level, it's been unable to climb up over the price resistance highs here at about 313. So it couldn't climb over this consolidation area. Of course, we've had an uptrend here, pretty much walking up its 20-day moving average since the March lows, pretty much, of course, staying above the 50-day moving average, which is a good thing. So we've had this uptrend here, then we've had a pullback to consolidation. The SPY has been standing atop pretty much here, the black line, the 200-day moving average, which is coming in right now, closing at $301.81, and the green line, the 50-day moving average. These are both important kind of trend lines, we could call them, when we're looking at charts. So it's positive that the SPY, especially in all of the crazy conditions our world is undergoing, that it's staying above these very important moving averages. Now we can see here on the 14-day RSI below that, as we know, the RSI came up and it climbed into the overbought territory when the SPY popped up here over 320. Back a little closer to May. Of course, then it fell back down and is now could be making here almost a double bottomed handle. Before we had talked about a potential head and shoulders, but fortunately that did not come about because head and shoulders are top reversal patterns. That hasn't come about. Now it almost looks like it's forming kind of a handle, I'm going to call it. And I hope it does. And since it's tested this zone twice here, I'd like to think that it's going to start heading back up toward 320, maybe 3,200 on the S&P. However, please know that second quarter earnings season will get underway a week after next. The banks are all going to start announcing on the 14th of July. And as you know, and especially this one, because of everything that's taken place in the last 3 or 4 months, this earnings season especially is going to be, let's just call it a very exciting one. Nobody knows what's going to happen, but I bet you my duck slippers is going to be really exciting. So either way, the SPY is now about 8% off of its all-time closing high back here in February at $338.34. Again, we're back out of correction territory, so that's a good thing. And the SPY is really sitting on its close Thursday right above the 20-day, the red line, the 20-day moving average. So we're still in a good place here. It just really remains to be seen what happens in the coming week with all of the news about coronavirus. And of course, what happens starting the week after when we start our second quarter earnings season. The second chart we're looking at today is the Invesco QQQ, symbol QQQ. Of course, as you know, this represents the NASDAQ 100, a major index in the stock market. As we can see, it closed this Thursday evening at $252.19. That is a brand new all-time closing high for the QQQ. Now, Also Thursday evening, Amazon and Microsoft also closed at brand new all-time highs. So those two powerhouses definitely contributed to the QQQ fireworks. So it's looking good. Now, blue sky up above is all we've got. We've got no more resistance here because this is an all-time high, except that which the QQQ creates itself. So we know that. And so there's no already preformed resistance areas in place. It's kind of on its own, as we would say. We do have support lows here down below the 20-day moving average. Price support lows here at 237 and down here at 231 where the 50-day moving average is coming in. As long as the QQQ continues to march up its 20-day moving average, to me, that is very much a positive sign. We will see if it continues to do so. Of course, again, earnings season is going to play into that a lot, so we'll see if it can do so. If not, maybe it has to take a breather. We'll wait and see, but stay tuned and remember, trade what you see, not what you think will happen, and we're going to talk about that a little later. Our final chart today is the Invesco Solar ETF, the TAN. Now, the TAN has 28 holdings. The top holdings are Solar Edge, Enphase Energy, First Solar, and Sunrun. Now, interesting thing here, solar stocks, of course, West Texas, can't talk, West Texas Intermediates oil and the XLE, which is the Select Sector Spider Energy ETF, that of course is an energy ETF, equities ETF, that started falling in January. Interestingly, the solar ETF flew higher and then fell back down here to the March lows like everybody else did. Kind of interesting. Sometimes solar stocks will follow oil stocks, and sometimes they don't. But what's interesting here is after the March lows, solar stocks started up and have made an uptrend and have walked up their 20-day moving average for the most part, while energy stocks have fallen to lows. Then if you will look at the XLE, they moved up to March to June 6 highs, and now they're kind of flailing. Energy stocks have fallen back, but interestingly enough, solar stocks, for the most part, have kept moving higher. So I found that to be an interesting kind of divergence. The TAN made a lows here in March at $20.20. Then again started moving up, moved up in a very nice uptrend here, started moving down a little bit like that, fell below its 20-day, but still definitely in an uptrend. Formed a pennant right here, formed a very nice pennant, and then broke out of that pennant to the high size this past Wednesday and Thursday, closing Thursday at $37.34. So with that breakout, which does look good, if the TAN can stay above the 20-day moving average in the coming week, I may add a small position to my trading portfolio of the TAN. Now, my initial stop is going to be down here just below this particular low here. I'm going to start out my initial stop right down here at $34.80, right here, $34.80. I'm going to put my initial stop. Now, if the TAN keeps going here, if it moves over 38, I will turn that stop into a trailing stop. So in the coming week, you may want to keep an eye on TAN and what it is doing. And now, before we go on to our final thoughts, the coming week will be the final week that we will offer a 20% discount on my popular online training, trader training, Trade the Trend to Profits. So if you want to discover an easy and powerful strategy to grow your portfolio, please check this offer out at the link on this screen, or simply click on the orange button below. And now I wanted to discuss this final point with you. Very, very important when you're trading to trade what you see on the chart. Trade what you see, not what you think should happen. Many traders decide where the market should go, and then they get that idea so fixated in their minds that they trade exactly that. And certainly I did that in the old days. Trouble is, the market may have different ideas, and the market may trade in a whole different direction. I always remember a very successful trader, you may remember him too, from a few years ago, Jimmy Rogers. Every time he was on CNBC and the commentator would ask Jimmy where the market was going, he would always shrug and say, I don't know, I don't know. Jimmy was right, of course. None of us knows where the market is going tomorrow or the next day, certainly not in the next week or a month from now. And when it does go where we think it might go, please know that it is a lucky guess on our part. So please don't get locked down. Stay neutral, and that way you won't hold on to a stock longer than you should and take big losses. And on the flip side of that, you'll be more likely to spot really good opportunities that other traders will miss. So for now, please remember that our already low-priced and popular online trading program, Trade the Trend for Profits, is on sale at a 20% discount. And again, this will be the last week. Again, I wish you all a very happy 4th of July. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.